Welcome back. The mega cap tech stocks were a major theme for investors all around the world in 2024, and they remain so in the early days of 2025. Let's talk about it. Let's bring in an expert. Nicholas Mersch is with us, portfolio manager at Purpose Investments. He specializes in tech at Purpose. Nicholas, thanks for coming in.
Thanks so much for having me.
Let's talk about Nvidia. It's a stock that everybody talks about. As you know, we get all kinds of calls from our viewers on this stock. The very common question is, am I too late? Have I missed the rally in Nvidia? Is it overly priced right now? You think the answer to those questions are no, and you think that Nvidia will continue to be a dominant story and a must-buy stock in 2025.
That's right. And I think if you look about last year, it was really about the year of the man in a leather jacket, Jensen Huang. And what Nvidia has really done is they've changed the system of compute. So they've moved it now from a GPU to an entire data center. And what they're doing is really sort of beyond this Moore's law principle that really doubled the transistors every 2 years. And what they're doing now is really seeing exponential gains in AI training models from creating entire systems. So you have to have everything working together, from the memory components to the GPUs to the networking systems, and really leveraging that to see those gains. There were a lot of concerns sort of earlier on about us reaching these plateaus when it came to training these AI models in terms of the efficiency gains we're seeing, but we're now seeing a lot of the compute really shift to the inferencing side. These models have figured out how to reason, and we need more data centers to do that. If you look at all this sort of mega cap tech commentary, they're all saying there's still supply constraint, and they still need to build these out. So I still think we're in this sort of 6th to 7th inning of this build out. And one of my predictions for into next year is that Nvidia will be the most valuable company in the public markets for the majority of the year. And the way that they can do this is they really have to execute on the Blackwell sort of rollout. So that's their most recent chip. They also have to protect some pricing power.
The stock now trades at about 47 times expected earnings. That's why people ask us the question that I phrased. What do you think is an appropriate multiple here?
So look, I think you really have to adjust for that growth component, because you have a hardware company really printing up on a profitability basis similar to these software margins. And this is really due to everybody needing these systems right now. And they have so much pricing power to protect. A hiccup in this could be, we've seen the introduction to the custom silicon solutions like Broadbell and Marcom, who are partnering with other mega cap providers to build their own chips to really lower their reliance on Nvidia chips themselves. So we really need to see that pricing power protected. Now, if you look at these earnings multiples, what they do is they really push out the goalposts every period. So if you look at some of them, they're actually trading on cheap bases compared to these pre-kind of COVID and pre-build-out cycles, because their earnings growth is just so massive. And I think we're going to see that again the next year.
Power has become a big theme in artificial intelligence. This is power supplied to huge data centers. One company, one stock that gets a lot of attention in that regard is Constellation Energy. You think this theme will amplify in 2025? Yeah,
absolutely. And I think the bottleneck here is going to move from the infrastructure layer onto the power systems, because we've seen a lot of grid stress. We've seen a lot of these antiquated grids really struggle. And if you look at sort of the data center consumption as a percentage of total U.S. energy consumption, it's going from around 4% to maybe the high end of 12% of total U.S. energy consumption. So you really need a lot of these energy companies to really step up here. Now, Constellation recently made that Calpine acquisition that really added that nat gas portfolio. And I think nat gas is going to be particularly interesting here, because you do have a lot of rhetoric around these nuclear names being built out, but at the end of the day, these things take a lot of time. These nuclear facilities, to get back online or to build something new, take decades, periods. So what you need is that nat gas backstop in that sort of middle period to really be able to pick up the slack in the mean term for this really drastic increase in power demand.
So you like Vistra and Constellation in this regard, correct?
That's right. So Vistra, they're an IPP in this space, a little bit more vertically integrated. They've got about 20 gigawatts in Texas. And a trend you're seeing now for the data centers, initially they wanted to be very close to these sort of hubs. So they were around Silicon Valley, they were in North Virginia, close to New York in terms of a latency issue. Now what we're running into is a lot of these companies are building data centers where you can buy a little bit more cheaper land with a lot better access to power. And that's right where Vistra comes into play. And if you look at Vistra over last year, it was the second best performer next to Palantir. And Palantir had its own sort of kind of gangbuster moment, but Vistra was number 2 in terms of performance last year. And I think they're slated to repeat pretty strong performance again.
And you call those companies IPPs. Very briefly, what does that stand for?
Yeah, so these are independent power producers that are much more vertically integrated, off-grid, work in different markets than sort of these government and sort of municipality regulated facilities.
Okay, why don't we finish with cryptocurrency? You are among those that think this will be a good year for crypto.
Yeah, and I think the really tailwinds behind this are a lot of the deregulation, because when you had Gensler in at the SEC, his model really there was to litigate instead of to regulate. And he was applying these really old and antiquated sort of frameworks around really regulating cryptocurrencies. What we really need to do is adopt to this new technology that is going to be really groundbreaking in terms of what it can do from a utility basis. So I'm particularly excited around sort of these applications that are being built on top of these systems, because we're going to get a lot of sort of use cases that are actually utility generating. So it was completely legal to generate these meme coins and a picture about a cat, but yet it was illegal to use something in terms of a transactional grid and transactional platform around charging and transacting on a grid that has energy storage, renewable infrastructure systems, and creating sort of a transaction network. If you created a cryptocurrency around that, it was completely illegal because it had some utility generating properties. So I think we're going to see a massive unlock in terms of the regulation around that. And on top, we've got a massive increase in terms of the flows that we're seeing through all these ETFs. So I think this year is going to be time back to build, not only on the energy front, but back to build in the crypto space for sure.